Well, joining us now with more on the jobs report and what the future holds for U.S. markets and the economy is John Herrmann. He's the director of Hermann Forecasting, which provides clients with analysis and forecasting of real-time events. John, thanks for joining us.
Thank you, Michelle. It's great to be with you.
John, let's start with the jobs report. What's your take on that?
In general, the numbers at first glance looked a little bit weaker than the consensus expectations, but when people factored in the very large revision to the data over the last year, then I think people realize that the economy is creating, on average, somewhere around 160 to 170,000 jobs a month, and that's a very decent clip.
Now, do you see that trend continuing?
I do, because what we have is we have construction and the housing market continuing to support the economy. The fallout from Hurricane Sandy is also helping to rebuild infrastructure in the Northeast. The multiplier effects associated with that kind of spending very high. In addition, we just continue to have good core growth as the economy heals itself. So we're seeing, even in retail, like you said, we're seeing retail jobs improve. We're seeing so much online shopping. We're seeing the transportation and the warehousing jobs improve as well. So broadly speaking, the economy, fortunately, is doing pretty good.
But yet we saw an uptick from 7.8 to 7.9%.
Exactly. So there are two surveys. We have the business, we survey the businesses for employment, and then we survey households. Households tell us the unemployment rate. Businesses tell us what their payrolls are. Month to month, they don't really line up every single month, but over periods of time, they do match. And so, for example, on the household side, it says that 1 million jobs were created over the last 6 months. And now we've got, with the new payroll numbers, it also shows that 1 million jobs were created. So they match up. So I think going forward, the unemployment rate probably fairly is at this level. And if the economy continues to create jobs, then the unemployment rate should grind lower.
Are any of the Obama administration enforced tax hikes and budget cuts budget cuts still to be determined, going to be a factor in job growth going forward?
It will restrain job growth. We saw even recently, we're seeing the government continues to shed jobs. So as the private sector is growing, the public sector is shrinking and deleveraging. So that's something that is inevitable, and it's going to be around for many, many years, not just 1 or 2, but for most of the rest of the decade.
Now let's focus a little bit on the manufacturing sector. That's been one of the big growth engines for the job market since the recession. But over the past 6 months, it seems to be petering out. Only 4,000 new jobs in manufacturing were added in January. Are we seeing a stall in manufacturing?
I think the stall that you're pointing to actually happened already, and was really a second half of last year development, as businesses were very cautious with inventories, and as businesses cut their capital goods spending when the Obama tax benefits expired. So that was our stall. Now I think we're in a situation where we have to replenish inventories because the motor vehicle sales are so good. So we have to replenish motor vehicle inventories. We have to replenish inventories more broadly. That'll really help the manufacturing sector over the next 6 months. I think we'll be okay.
So do you think, with all of those positives that you've just mentioned, the contraction in GDP is just a one-off blip and we'll see better growth in the next quarter? I
think this is a very good point. So, going forward, there is going to be, each quarter, there's going to be this offset from government, from a contraction in government, offsetting the gains in the private sector. So that's what we're going to see. And I think it's going to be lumpy. Some quarters you'll see a bigger decline in the government, kind of offsetting things. Other quarters it may not be as severe, but in general we're going to see that. But if you just focus on the core private sector, that's growing over 2%, and that's, again, business spending, consumer spending, and residential construction and exports, and those are growing above 2%. So it's the private sector is in pretty good shape. It's the public sector that's the drag on the economy, but that's, in the long run, that's a good thing.
Now, finally, and very quickly, your take on the markets. The Dow hitting past that key 14,000 level today. A bull run to be continued?
I was asked that by so many clients today. I was amazed. And all I could tell them is, a few weeks ago, we told them to rotate into stocks and move out of fixed income. And I think it's a trend that's going to continue. So many people are behind that, are trailing that move.
Continuing trend then?
I think it's a continuing trend. I think it's going to be a good thing.
Okay, thank you very much, John
Thank you.
Herrmann, Director of Hermann Forecasting.